What kind of investor are you? You see, there are three kinds of investor: the active investor, the semi-active investor, and what we call the passive investor. In this video, I'm mainly going to focus on stock investing, and the instruments using stocks has a primary focus in this one video. Alright, so what do I mean by active investor? Active investor is somebody who looks at the markets every day, who likes to look at charts every day, and who likes to basically spend their time analyzing the markets on a very frequent basis, right? Maybe you're doing this on a daily basis, right? If that is you, what will be possibly suitable for you is trend trading, right? So what exactly is trend trading? Trend trading is when you actually see that, hey, a stock is at a support level, for example, and when it actually swings up, this is what we call swing or momentum trading. When it actually swings up to actually sell, and this is something that you can actually actively participate in to get the feel of the markets, to actually participate in swings and momentums, right? So this is something that you can do almost on a daily or a weekly basis on a given set of stocks. What's the pros of it? The pros of it, very simply, is you get to feel that urge of trading, right? Feel that urge of actually trading and feeling the movements of the market. And especially in a year like this, right, it is very possible to do because of massive movements in the market and massive movements in the individual stocks as well. Something that you can very possibly do. Number two, maybe you're a semi-active investor. A semi-active investor is one who perhaps only wants to look at it maybe on a monthly basis, maybe 2 weeks once, or maybe once a month, for example. If you do choose to actually do that, then hey, one of the instruments that you can actually use and actually try and participate in is options, right? And selling of options, right? So selling of options is a monthly activity where you collect income on a monthly basis from your stocks, right? From the stocks that you hold, you're collecting a monthly income, and that's something that you can actually participate in, right? By being a semi-active investor, right? This allows you to achieve anywhere between maybe about 2 to 5% on a monthly basis. Alright, so that's for a semi-active investor who's looking to get consistent income on a weekly or a monthly basis, right? And let's say, for example, if you're a passive investor. A passive investor is one who perhaps you're very busy with your work schedule, you're very busy with work, and you're not exactly very interested in looking at the markets on a weekly, monthly basis, right? You want to just let your money grow. If that is you, for example, then hey, what I would recommend very simply is to start investing in index funds, right? To start investing in index ETFs like the S&P 500, like the NASDAQ, for example, and get it at a good price whenever there's a big discount or where there's a fall, for example, to get it at a good price and let it just roll, right? So technically, a correction happens once every year. Alright, sometimes happens more than 1% every year. What's a correction? A correction is a 10% drop from its highs. So this happens ever so often. And whenever that happens, if you do just simply enter the index ETFs, this will give you substantial gain as well. Alright, so this is something that I recommend for people who are passive investors. So what you need to identify is, who are you? Are you a person who's very active and you have a lot of passion in looking at the markets every day? Are you semi-active, a person who actually wants to look at it on a monthly basis, or you're a passive investor? Alright, and based on the different things, your strategies might be slightly different. Alright, so then again, make sure, regardless of wherever you are, right, regardless of whether you are a semi-active investor, active investor, or whatever, right, what's most important is that the foundations are built. The foundations is what is very important. And the foundations are investing in good, solid, long-term investments which will continuously grow over the long run. Only once that is filled out do you then proceed on to doing all your active stuff, right? So that's something which is very important, which a lot of people miss out. Is your foundation built right? Is your foundation built on solid ground? Is it is it in good companies that are actually consistently growing? Is that foundation already built in portfolio? And if it isn't, go and start building that foundation first before doing all sorts of funny strategies and stuff in the market. Alright, it can be a lot of fun, but then again, it can be a deck of cards which just stumble down without a proper foundation. So make sure, my friends, regardless of what kind of investor you are, make sure you build that solid foundation in your investing journey. Thank you. I hope you found this video useful. And if you're looking for any resources to actually help you in your investing journey, you can always check out the links in the comment section down below to really assist you and help you in your investing journey. Take care, God bless, and I'll see you in our next video.